Okay, guys, today we're going to do taxes for a woman named Gregoriana Stubenville. So you should have the source documents with you, provided with your practice returns package, and that includes the client write-up, so description of the client, the source documents, W-2s, 1099s, the materials that you use to do the tax return, and then we're going to get into doing the tax return right now. So we'll go ahead and add the client. Let's just, this is our practice return database, so we don't have any real numbers or names in here. This is only for practice tax returns. We go ahead and add the client. First thing we want to do is get the client's information, basic information into the computer before we start going to all the forms. One thing that is interesting about the write-up is that this taxpayer has dual citizenship between the United Kingdom, so Britain or England, and the United States, okay? So that kind of brings up the factor of, well, if she's a citizen in the UK and Britain, does she not have to pay income tax on all of her U.S. income, or how does that exactly work? And there's something to keep in mind on that is that a U.S. citizen, even a dual citizen, you have to pay income tax on all of your worldwide income. Okay, so any income that you're getting from any other country would also be taxable if you're a U.S. citizen. Now, that's a general statement. There definitely are quite a few exceptions to that rule and different loopholes, okay? But as a general rule, an individual like this who's a dual citizen is going to be taxed much the same way as a regular U.S. citizen who does not have dual citizenship. And that goes for California as well. If you're a California resident, as this woman is for the year, you know, the fact that she may travel temporarily to England or to a different country isn't really going to affect the fact that her income is going to be taxable to California. So that's something that you know, you would look at right from the front there. Next, you would want to look at the filing status and determine the correct filing status for this taxpayer. We can see here on the client write-up that she adopted a child from Africa, so from a different country, and the adoption was finalized in March of 2013. Since we're preparing the 2012 tax return, if it was a domestic adoption that took place of a child in the U.S., maybe that child would be living with the taxpayer. In this case, since the child was from a different country, we're going to go ahead and assume that the child was not living with the taxpayer until the adoption was finalized in 2013. So that would mean that the taxpayer would be a single filing status. Okay, so we'll go ahead and start putting in the information, name, social security number, 93. Okay, type of work, she's an account executive at Toyota. So we can tell, okay, works at a big company, she's a professional person. Her birthday, June 6, 1944. It's D-Day. Okay, just want to give a quick shout out to all the troops that have served our country over the years. Got to definitely remember their sacrifices, especially you know, in those difficult times. And okay, so we also notice here about the age, that's age 65 or older, the taxpayer is going to get an extra standard deduction. So that's something to keep in mind. And I just want to quickly show you guys that, as it's something that would come up in this first stage of the return where you kind of getting to know the client. It's something that might jump out at you. And let's see, my computer seems to be a bit slow. Let's see if it can get it together. Forms. Okay, it doesn't seem to want to work. Don't send. Okay, this computer is not working that great right at this exact moment. So that's something that you definitely encounter with doing taxes is you become reliant on technology, and it doesn't exactly work perfectly all the time. So it's something that you got to kind of be able to roll with the punches. Usually closing out the program or turning something off and turning it back on, a lot of times will clear it out. So let's go ahead and look at that page 2 of Form 1040. And so we can notice here, this box here, it says you were born before January 2nd, 1948. What that's getting at is that if you were born before that date, you get an extra standard deduction. So you get a little bit of extra added standard deduction rather than just the regular standard deduction for a single person. Okay, so you can see here she has a higher standard deduction at 7,400 than the normal single deduction. Okay, which would be here. So that's something to kind of keep in mind as you're setting up the return, getting to know the client. We can go back here and pop in the address. Green Circle Drive, Beverly Glen. Sounds like a nice place. Okay, phone number. Let's say it's 310. Okay, email. Let's say she doesn't want to give her email, so just one contact. I'm going to go down here. Pronto tax class graduate for the preparer. Okay, for the dependents, we would have to ask the client obviously about this child that she's adopted, or if she's supporting anybody else, and that's something that you would ask as you're doing a tax return. Is even if the taxpayer, the client, is not telling you, hey, I have a dependent, you would want to ask, are you supporting anybody else, and then run through any tests to see if they might qualify as a dependent. In this case, we're going to assume that the taxpayer does not have any other dependents. And again, the child was adopted in 2013, so since we're doing a 2012 return, we wouldn't be able to claim that child as a dependent, unfortunately. Okay. On the cert, asks us for electronic filing purposes to just check these two boxes here. And once we have the information into the computer, we want to go to the income. So we go in steps, info, income, deductions, credits, and then closing. That's the system that I use to do taxes, and I just want to throw that out there for you guys to, be able to kind of structure the interactions that you have with clients, because that's one of the most important parts about being a tax preparer. If you ever wish to, make a decent living at it, is to be efficient. So that having a structure of how you deal with clients, it prevents a lot of disorganization, and I would definitely recommend that even if it's not my structure or our structure, that you have your own system for the order in which you put in information for a tax return. So let's get into the income portion of it. And first item of income would be Ms. Stubenville's W-2, okay, from Toyota. So we'll go ahead and take that information directly from the W-2. Toyota of Los Angeles, okay. We want to check here retirement plan. So we can see that there is a retirement plan here. 401k, she put in fact, $20,000 into that 401k. The income for federal income tax purposes is $165,000. However, if you look in that box 2 of box 3 of the W-2, Social Security wages, you'll see that her real salary is $185,000, but she's diverting $20,000 of that into a tax deferred account, which is a 401k account. Okay, that's something to keep in mind. Is she's still making a higher salary than she's actually paying tax on, because she's using that tax deferred account, the 401k account. The amount of tax that she's paid in during the year and withholdings for federal income tax, $18,529. We can see here that we actually have an error on the W-2, and again, we're just starting out making some of these practice tax returns, so sometimes we have an error on there, and we can see the Social Security wages is different, $110,100, than the $185,000 that's on the W-2. Okay, so that's something that the reason why the LaCert, the tax program, is correct in this instance, because over this amount, this is called the wage base, the taxpayer does not have to pay Social Security tax after that point. There's a maximum amount of Social Security tax that can be paid. Okay, so this W-2 is actually incorrect. And let me talk to my assistant about that. Well, actually, I made it, and I made it incorrectly. So I'm going to have to take the fall on that one. But I think it's instructive to see, okay, beyond this amount, if you make $185,000 on salary, you don't have to pay Social Security tax on that entire amount, only up to the wage base for each year. And each year that wage base seems to go up a little bit, okay? On the Medicare side, however, you do have to pay Medicare tax on that entire $185,000, okay? So keep in mind when you're diverting that money into the 401k, you're not avoiding Medicare tax on that money in this instance. State tax withholdings, let's see here. She actually did not have any state income tax taken out. Okay, that's going to be a big problem because she has quite a bit of income. So if you look at this W-2, again, it's sort of an incomplete W-2. It's kind of a sloppy W-2 to be honest with you. But like I said, this is really more about the process of looking at the return, reading the documents. Sometimes you'll even get real W-2s that are not correctly prepared. So maybe this is good practice for that. SEI is also not in there, which it normally would be. I'll tell you what, on this one, let's go ahead and yeah, no, we're going to go ahead and go with the incorrect numbers, and we'll only do the federal tax return, just because this W-2 is not very reliable. But let's go ahead and just persevere on it. There are some interesting things on this tax return that we'll look at. We'll just use the incorrect W-2 numbers for now. One expression that I like is that the perfect is the enemy of the good. So I'm not sure if you heard that before, but something can be good without being perfect. And sometimes you strive for perfection, but you're not going to get it. So sometimes you got to be happy with doing the best that you can. So that's my platitude for the day. Okay, so let's look on this W-2. There's a couple other things going on here that are interesting. If you're into this sort of thing of doing taxes, and we can see in box 12A we have that 401k contribution. So whatever software that you're using, it's always going to have a part of the software to use when you're inputting figures other than just the basic tax return stuff like wages, federal income tax withheld. There are some other codes in this box 12 that you'll frequently use. And even if you don't use them frequently, it's important to be able to code them into the tax software correctly, because you never know when something here will affect the entire return. So we can see here she had non-taxable sick pay as well. So that tells us something about the client. Okay, she's a little bit of not an older lady, but let's just say she's more experienced, and she was sick for part of the year. Okay, so that's an entry point for you as a tax preparer to get to know the person. And we talk about doing taxes. Yes, there are a lot of numbers involved. Absolutely, you have to be able to deal with numbers, but more than anything, you have to be able to deal with people. So somebody that's gone through an illness, there's a human interaction that you have around those kind of things, and be able to really get to know and relate to your client. See how their year went. If she had a difficult year, if she was out of work for part of the time due to being sick. So something that you would pick up on. We also have here this adoption benefits. Okay, so that's her work actually gave her some adoption benefits to be able to help with that adoption that she was going through. Okay, so that may come into play on this tax return, because remember, the adoption didn't finalize until 2013. So that makes me wonder if this is going to create taxable income. And we're going to have to use the tax software to figure that out, but that does jump out at me as something that could potentially happen, is that this could create taxable income if the adoption wasn't finalized until 2013. Okay, so that's just a kind of a couple things to jump out as far as reading a W-2. Not every W-2 is going to be very simple and straightforward, and not every W-2 is going to be completely correct, to be real honest with you. A lot of the bigger companies will have more complex W-2s, and a lot of the complexity will come in this box 12 with these different entries. You can see all the different entries that this can that can be on a W-2. So a lot of it's just data entry, getting into the correct box in your tax software, but it's just a couple examples of that. The next type of income would be interest income. Okay, so that is coming from Bank of England in this case, back in the homeland of Miss Stubenville. Okay, we can see here that her interest income is very considerable, so it's over $18,000. Now, with interest rates being pretty low these days, that's telling you automatically that, hey, she has quite a bit of money in the bank. Okay, so again, you're interpreting these numbers. You're not just punching in the numbers and not paying attention to the person that you're dealing with. And that's something that I really try to stress in doing taxes that'll make you a lot more successful is, be able to interpret those numbers that you're seeing. The age of the taxpayer, how much interest they have, interest income, what their salary is. In this case, she has some foreign tax paid on the 1099. Okay, so a lot of different things that you can learn from people by doing their taxes. That's definitely for sure. On this one, we can see that not only does she have the income, guys, but she also, if you look in box 4, she had some tax taken out of the income and paid ahead of time. So that would be in this tax withheld section. And essentially the bank took and paid $2,535 of income tax ahead of time out of this interest income. So you want the taxpayer to get this credit. Hey, you already paid part of the tax on this interest income. So that's something that you want to be able to pick up here, and we can see, okay, here it is, making sure that she's getting credit for that. She's getting credit for her W-2 withholdings as well as her interest income, the tax she paid out of that. And speaking of credit, we're going to be able to use on this one the foreign tax credit, because what happens here is that she has actually United Kingdom, she's paid, and this would be passive category income, so that would be interest income is passive income. Okay, she already paid in US dollars $152 to a foreign country, so she's paid some income tax to Britain, to the United Kingdom, on this same interest income, and you can see that in box 6 of the 1099 INT form. So that's going to pull up that foreign tax credit, and the foreign tax credit is essentially going to see how this credit, you get a credit back. Hey, you already paid the United Kingdom $152 of tax, so we're going to give you a credit to reduce your U.S. income tax. So that way you're not being double taxed on the same income. Okay, so that foreign tax credit is something that you definitely would want to pick up, because it's a credit for the taxpayer that can reduce their U.S. income tax so that they're not being double taxed. A lot of these things, especially if you're just starting out, guys, maybe seem very, very complex, but if you look at the source documents that we've provided, a lot of the stuff is right on there. It's just a matter of finding the right place to put that, and then kind of understanding what's going on. And that just comes with time. It just comes with practice. So it's not something that you're going to know everything right away. This is definitely the type of business where you learn something new every day. And I could still say that 12 years after doing this type of job, you still definitely learn something new literally every single day. So just keep that in mind as we're talking here. You don't have to know everything ahead of time. We're just learning together. That's what it's all about in doing some online learning like this. Okay, next type of income that we have is actually business income, and that's that 1099 from Logistics Corporation for $10,000. So we can see here on the write-up that the taxpayer has a consulting business on the side based out of her home. You look at last year's tax return and you see that she took a $21,528 loss on a Schedule C. Okay, so that means that the Schedule C is actually, at least last year, it's taken as a loss against her other income, which would then reduce the tax that's due on her salary. So that she's getting some tax benefit from her business write-offs, in other words. Consulting can be all different kinds of work. Let's say that she does some consulting for an educational institution. We can use this business code here, just for the sake of example. Okay, so cash taxpayer, let's see, her total gross income from the 1099s would be from Logistics Corporation, 10,000. Okay, so that goes on the top of the Schedule C. Let me go back here, and I don't think this is a good for this logistics. That's not a good code to use. Doesn't really make any sense. Let's see if we can do transportation. Support activities for transportation. Yeah, even that is not too great, but let's go with that. Logistics consulting. If you ever want to look up, you can always look up to business codes, Schedule C, consulting. Okay, don't be afraid to use that thing called the internet. Okay, we see here possible result in the Yahoo message boards. Okay, based on the fact that you mentioned organizing as well as training, I think the best fitting category is professional management development training, which is code 611430. And so these are actually called NAICS codes. Okay, and you can actually go to their website and search these codes. Okay, so just to kind of show you, that it's not just the tax software that it's your resource. You have a lot of other resources that you can use, but typical of the internet, now it's telling me that that's not a valid code. So I'm going to be persistent. I'm going to go over to the yeah, there we go. So free lookup at the NAICS, and we can just do consulting. Okay, let's see. Maybe other management consulting services. Okay, that looks promising. So I would go ahead and just cut and paste this into here. Still not a valid code. Let's see. Okay, let's see if we can use this. Oh, still not a valid code. Okay. And when in doubt, guys, you can always go to the unable to classify. Okay, all nines. So I'm going to do that right now because I just don't want to get frustrated on camera. But just kind of showing you, again, it's just about the process. It's not always about the result. Although when you're dealing with real clients, you have to be very results oriented. But on these practice tax returns, I just want to give you an idea of, kind of how to do a real tax return. And kind of some of the things that you have to think about. So once you have the income for this consulting, you want to go to the deductions. And you can tell that, hey, if you took a $21,000 loss on your consulting side business last year, you most likely have a lot of different deductions, okay? So hopefully this type of taxpayer would provide you with a profit and loss statement from the business. And so let me just kind of show you what that kind of thing would look like. Let's see. Yeah, that one's okay. Yeah, this would be a good example of a profit and loss statement. So thanks to American River Bank for providing this image here. So this is what you ideally would want to get from a Schedule C taxpayer or anybody with a business activity is, all the income on the top, and then here's all the deductions. And you would just copy all these deductions into the Schedule C. And that basically would be your Schedule C. And you come down here, you have your net income. You can make some adjustments here, like we noticed this is a home-based business. Also, this is obviously a certain time period. You always have to look at the time period of that profit and loss statement. So ideally, that's what you would have. Some clients are, to say the least, aren't going to provide that type of organized, profit and loss statement. So you may go through the deductions with the person, accounting, what you paid to do your taxes last year, advertising. Let's say you did business cards, and an ad in your local church bulletin, whatever it might be. Bank charges, a business bank account. Let's say it costs $10 a month. Commissions. Did you pay any other, anybody else any commissions from the income that you brought in? Let's say that she paid commission of $350. Okay. Insurance. Maybe she has a type of business insurance or liability insurance. That would be a deduction. On Schedule C, guys, anything that is ordinary and necessary to the production of this income right here would be deductible on Schedule C, generally speaking. Okay, and ordinary and necessary is a little bit of a term of art in the sense that necessary doesn't mean that it's 100% necessary. This means that it's helpful or appropriate for your type of business. Okay, interest. Let's say that the taxpayer is using a credit card to buy business equipment or to incur business expenses and pay some interest on that. That could be a deduction, the interest itself. Laundry and cleaning would apply more to uniforms. Office expense, if you're a consultant, may have some office expense, new desk, that kind of thing. And I'm just going to show you some deductions here. It's not, like I said, we didn't provide all the deductions in this practice tax return to you, but I just want to give you an example of what kind of thing would happen. Printing, let's say that was $140 and doing some printing at Kinko's. Supplies, $92. Okay, telephone would be an interesting one because the not all of the telephone expense for someone who has a side business should be deductible, because not all of it's business use. So let's say that she has a $100 a month phone bill, and she uses it. Let's say that you use it half for business, so that would be a deduction for the year, right? $50 a month, half of 100, be $600. Okay, let's say she has a meals and entertainment, $329 for the year, taking some clients out to eat. Another thing that would come up would be vehicle expense usually, so especially if it's a home-based business, she may be able to take some business expense or some vehicle expense on Schedule C. So you'd go down here, okay, vehicle primary earning, yes. No other vehicle, okay, that's all fine. What type of vehicle? It's a 2008 Audi. She first started using it for business. Let's say it was 1/15/2011. Total mileage, 12,000 is about average. Let's say that Gregoriana Stubenville drives 14,289. Okay. Her business mileage is probably not going to be a lot because she only has 10,000 of consulting income. So she could provide, maybe 2,500 of miles. We can take a look at that at the Schedule C, and we'll see whether or not that's going to be, how much of a deduction that's going to be. And that kind of goes to the value of the deduction, and I'm going to press suppress on the Schedule C easy because I want to look at the real Schedule C. Okay, just because we're learning here, so I want to see the full form. Okay, so here we can see the type of business, we can see how much total income, and we can see the deduction. So here's that car and truck expense deduction. So it's a $1,400 deduction, okay? And then on page 2 has the details of how many business miles versus other miles, so i.e. not deductible miles, personal miles. And so those are the kind of things that you would put into the Schedule C, and you just sort of work down the list. A lot of the stuff in taxes can be very mentally challenging, but there's also an element of you're just making a list of deductions. So sometimes you don't overthink about it. Just, is this a deductible expense? Yes. If so, how much was it for the year? You also have this other expenses area of the Schedule C where you can put other expenses that maybe aren't on the list, on the pre-made list. So let's say seminar, $499. What other type of expense would a consultant have? Let's say she had a little bit of travel, went to Las Vegas. Okay, a little bit of a travel expense. Okay, so at that point, you're going to have on the Schedule C, you're going to be able to have a net income amount. Okay, so here's your gross income, and then after all the expenses, the total expenses $5,700 as of now. So you have a net profit of $4,254. We mentioned though that it was a home-based business, so that's going to mean a home office. So I want to show you guys how to do a home office form. And like I said, a lot of this stuff is a little bit more advanced, but hey, we might as well take a look at it while we have the chance to be learning together. So let's take a look at how to do business use of home. That's a Form 8829. In a different version of tax software, this is Lacert that we're using, maybe a different entry or way of entering it, but a lot of the principles and the numbers are going to stay the same. So we're going to point the deduction to the Schedule C. Okay, there may be multiple Schedule C's here, so you want to choose the right one. Business use area of the house, let's say it's a 2,000 square foot house. Business use area is 1/4 of it, let's say. Let's just keep it simple. Once you put in this business use area, it's going to create this form 8829, it's going to take that percentage, a business use percentage, okay, of all of the home-related expenses, and you can see that's 25%. So because 500 is 25% of 2,000, it's going to take 25% of all the expenses and put that onto the Schedule C as a business expense. Okay, you get how that's working? Let's see how it comes out in action. We'll see how it changes the net profit. So let's say that the person's renting. Okay, they have renter's insurance. She has a lot of nice stuff in her place, and so let's say that she pays renter insurance of $320 per year. Let's say that the rent is fairly expensive. She has a nice place, $24,000, and then utilities. Let's say it's like $100 a month, so $1,200. Okay, those would be typical housing expenses. And again, we're not providing every single last bit of information in the practice returns because we really just want you guys to get practice. It's not about being, having every last thing correct per se. This is about the process. So that would be filling out form 8829. Now let's take a look. Whenever we fill out a form in our tax software, sometimes we like to do is look at the result of the form. So read the form. Okay, say, hey, this form 8829, does it look correct? Okay, yeah, it looks correct. 500, 25%. Okay, here's the totals. Okay, that's the totals, 6,381. And then, okay, yeah, so 25% of that. Or no, excuse me. What's happening here is that the allowable expenses are going to be maximum at $4,254, and the reason why that is because that's the amount of net profit. So that's something very important about a home office, is that you cannot use a home office to increase a business loss. That's a key factor. You can only use it to reduce the profit to zero, and that prevents people from writing off their rent and just taking that as a deduction on a Schedule C. So that's something you'll definitely run into as a tax preparer when you're doing a home office form for somebody that doesn't have like a lot of income and they have pretty many write-offs. So you can see though that she got a lot of tax benefit from using that home office because she reduced her net profit from the business to zero, and before it was at $4,254. So that's a good deduction, that home office deduction. I also would point out here that the other part, like here's the total deduction, right? The usable deduction, which is 25% of the total expenses here. She gets to carry over the rest of that deduction. See this? Carry over to 2013. So that means she has an unused deduction that she can carry over to the next year. So this is something that is there's a tax benefit associated with this, especially for a higher income taxpayer like this lady, Gregoriana. Okay? So again, a couple of more advanced topics, but you're not afraid of it, and we're not afraid to get into it. Okay, so that would be the net profit on Schedule C, and you can see on the 1040 itself, okay, the tax return that's actually going to go into the IRS. You can contrast the treatment of how the wages, they go in as a straight number, 165,000. The interest, it goes in as a straight number, 18,502. When you come down here to line 12, you actually have a zero here. You don't have any income at all. Even though she does have consulting income, on the Schedule C, that consulting income is netted down to zero. So she actually doesn't have any income to show on that line. And that's why they say that business owners get get all the tax breaks or get better tax breaks, because business owners have the ability to directly adjust their income by their deductions on Schedule C, okay, and on other forms of business as well. So they're able to net out instead of having the gross amount, the total amount here, such as for wages or for interest income. So again, that's something to kind of keep in mind from a theoretical point of view. Once we have all the income in, okay, so we've addressed a couple tricky income items, we want to start looking for deductions, okay? So the deductions for this taxpayer, because we've already had kind of a long tax return, I'm not going to give her a lot of different deductions. I'm actually going to let her take the standard deduction, which would be 7,400, and we'll just keep it simple on the deduction side because we've already had a couple tricky things. The credits, she did attend UCLA Extension and got some education there. I'm gonna imagine that she is already past her first 4 years of college, so she wouldn't get the American Opportunity Tax Credit. You can hear the phone ringing in the bathroom, in the background. I'm going to go ahead and take the liberty of ignoring that phone call today because I'm focused on this video. So nothing personal to that client that's calling, but I'm going to have to call you back. And that just tells you another thing about tax preparation is there's a lot of multitasking that comes in with it. You know, the phone may be ringing, you're trying to concentrate on a tax return, clients walking in, you're trying to make sure they get greeted well. There's a lot of different things that can be going on at once. So sometimes you have to be able to prioritize what are you trying to do at that point, you know, and also be able to multitask. So we're taking this off the 1098-T, which is the document provided by UCLA Extension saying, hey, this person went to our school, they paid us this much money for this year, and that's provided in your source documents. 1098-T received would be yes. Okay. The federal ID number for UCLA Extension, this is not their real one, but it's one that we put in. Okay. And then the amount of the qualified tuition and fees would be $1,251. Okay, we also have an interesting thing on this tuition statement, which is an adjustment made for a prior year in box 4. You can see $250. Okay, so that's some kind of an adjustment that was made, like maybe the school, you know, overbilled her and then credited back some of her tuition payment from a previous year, or the other way around, maybe. Maybe she owed the school more money, and so they adjusted her account from that year and made her pay more. So some kind of an adjustment was made. We're going to look and see at the education credit. We're not going to worry too much about that adjustment because of one reason, and let's go see what that reason is. You might already know it. Okay, so we're going to look for, here's the tuition and fees deduction, line 34. There's nothing there, even though we put in that $1,251. And we can see here there's also no credit, so there's no education credit on line 49 either. So what's going on here? We can see here student completed first 4 years, so we're going to take out, disqualify the American Opportunity Tax Credit, and we're going to go for that lifetime learning credit. What we can see here is that it's not showing up. Okay, so she's not getting a credit. She's also not getting a deduction for this educational expense. And let's look at what that is. Okay, let's see. Okay, and it's because let's see, so the tuition and fees deduction is disallowed because the income's too high. So a lot of times when the income's higher, the taxpayer won't qualify for that education credit or that education tax deduction, the benefit for it. And that's something that is you'll encounter with high earners a lot, is that deductions or credits may be reduced because they are a high earner. I see a couple different red flags too on this return before we'd be able to close it out. So we just addressed credits. Now we'd be moving to closing out the return. And so that, for diagnostics, is a great tool in Lacert to do that. I'm sure you have in whatever software you use, there's going to be a similar type of diagnostics tool to make sure the tax return is ready to be filed. In this one, we see this is sent to an invalid form. Eligible child name or number, and that's what I was concerned about before, about that creating taxable income based on those adoption benefits provided by the job. Okay, so at that point, I want to see if is there a possibility for us to take the adoption credit in this year, because she was paying those expenses in 2012. So let's use about.com. They're a pretty good source overall. And let's see, adoption credit. Okay, when to claim the so what year you can claim the adoption credit depends on when the adoption was finalized and whether the adopted child is a U.S. citizen, resident alien, or foreign national. So in this case, it's a foreign national. The child was living in Africa, and so that's going to bring us here. If a child's a foreign national, then you take the adoption credit only in the year when the adoption becomes final. Any expenses paid in the year after the adoption is finalized, you can take a credit for those expenses in the year that you paid them. Okay, so we have an issue here with this this W-2, the expenses that were paid in box 12C for the T. So what I'm going to go ahead and do with this issue, just for the sake of being able to finish off this return during the scope of this video, is to actually remove this adoptions benefits and make it go away that way. But obviously, if this was a real return, we would have more work to do. You know, maybe we'd have to contact the work and see, hey, you know, you guys didn't handle this properly, or what's going to happen, or maybe that 10,000 would have to get added onto the income. Okay. Those are something that you'd have to address in a real tax return. For this one, we're going to go ahead and take the easy way out, and all apologies on that, and just say no. Here's another thing that jumps out at me about this diagnostics is the tax program defaults to checking the no box on Schedule B for the question, did the taxpayer have a financial interest or a signature authority over a financial account located in a foreign country? So this Bank of England account, which would be this account here with all the money in it, that actually is a foreign account. Okay? So on the Schedule B, where it asks that question, and let's see where it is. So here's Schedule B, guys. And this actually would be, and anytime, did you have financial interest or a signature authority over a financial account located in a foreign country? And that actually would be yes. So we could go ahead and jump to input. And let's see, we would check yes. Name of foreign country is United Kingdom. Okay, that's going to change that to yes. And if yes, are you required to file a form TDF 90-22? That's that Foreign Bank Account Reporting Act, okay, where people with overseas account now have to file this special form reporting if you have a significant amount of money in a foreign bank account, you have to file this extra form. And they actually built these questions into the Schedule B, which is the interest income form. Okay, so again, this is a pretty tricky return, and we're encountering some good issues here. That's definitely something that would jump out. They have really, really heavy penalties on that if you don't do that. Okay, so let's see, indication, and again, this is saying you have to fill out this form and to report the foreign bank account. We're going to go ahead again and take and ignore that. You know, if it's a real tax return, you have to sit down with the client, obviously, and you know, make sure that this form gets filed, because there's very, very heavy penalties for not filing that form. Since this is a practice return, we're just going to kind of point it out and leave it for you guys to, you know, to figure out and think about. Maybe do a little bit, you know, extra research, just preparing for that time where you'll have a real client who needs to file that particular form. I also want to point out here in the time that we're trying to close out the tax return is that, see this, an entry in 2011 tax liability may reduce the Form 2210 penalty. So that's this penalty here. Here's Form 2210. And this is the underpayment penalty. So when you owe at the end of the year, this is automatically telling us that the taxpayer owes tax. Okay, which wouldn't be that surprising because she's high income. She has a lot of interest income. So this calculates the penalty, this form. And you can see here, okay, this is a pretty severe penalty. It's $325 extra tacked onto the tax bill. And this penalty is actually based on the tax liability from the previous year. So that's something that you would be able to adjust, and you could look on the last year's tax return and see what was that tax liability from last year and take it off Form 1040. You would look on Form 1040. If you're looking for the tax liability, you would go to page 2, and you would look here. Here's your total tax. So that's your tax liability. That's her tax liability for 2012. But let's say for 2011, since she had that big side business loss of $21,000, let's say that it was less. It was only $34,008. Okay, that's going to adjust the Form 2210 penalty. Okay, and now that penalty is only $258. Okay, so these are a lot of different things, again, that can be kind of complex, but it's all about saving your client that money. You know, yes, it's only about, what, 65, 70 bucks to reduce from 325 to 258, but every little bit that you save your client, you're having that positive return on investment. So you want to always be looking out, especially when you're trying to close out a return that's kind of complex like this. You always want to look out. How can I save the client money? You know, how can I reduce the tax? You know, legally and ethically, of course. But what are the things that I need to look out for to make sure that my client is getting the ultimate tax benefits that they can, and I'm not missing anything? That's what this last stage of the return is all about. Okay, so we do have some other things that we would have to address, like I said, if this is a real return. For the sake of time, I'm going to go ahead and just say that we're going to be done with this return. And I do want to run through the tax summary to give you guys a, kind of a big picture of what happened here. Okay, so we can see here we have the wages, okay, $165,000, and remember 20,000 of that salary is being diverted into a 401k, so it's being tax deferred. And since look at her marginal tax rate is 28%. So that means that of that 20,000 that she deferred into the 401k plan, the government would have taken 28% of that money. So that's a good idea for her to divert that money because she's at a pretty high tax rate. Okay, so that's something to keep in mind. What's her tax rate? That's the benefit of deferral or also of her deductions. She has a lot of interest income added on to her total income, so $183,502. To keep the example somewhat simple, we just went with a standard deduction, and she didn't have itemized deductions in this case. Also is going to point out that since her business income is zeroed out, it doesn't even appear here. Okay, standard deduction means deducting or subtracting from her income, right, before they tax her. That brings her to $176,102. She has an exemption deduction for herself of $3,800. In 2013, she'll have 2 of these exemptions, right, because she'll have adopted the child. So this exemption deduction, again, deduction means subtracting or deducting. Okay, so that's reducing. And then now that brings us to the taxable income, which is $172,302. So total income is up here. And this is how much income is subject to tax or being taxed, exposed to tax, $172,302. The income tax on that amount is $41,705. She does have one credit to directly reduce this tax of $152 for the foreign tax credit. So that directly reduces the tax. Brings her total tax to $41,553. At that point, you're basically making a comparison between this is the tax and this is what was already paid. Okay, so this is what she paid in withholdings. That's not going to cover that tax. Okay, so this is her total tax for the year. It's what she already paid. It's going to pay part of it, but definitely not going to pay all of it. So she's going to have some more to make up. And so she also has an underpayment penalty because she didn't pay enough during the year relative to what her tax liability was the previous year. So she has an extra penalty tacked on by the IRS. So she's going to owe a balance of $20,747. So you're not going to have a lot of good news on this tax return for the client. The good news, though, would be that she does have some money. So because she has all that money in the bank, so maybe $20,000 isn't that big of a deal for her. For a lot of people, it's going to be a pretty huge deal. You may not want to, like I said, finalize this return right now because you have some other issues that you definitely would want to look into before finalizing it. But hopefully that was an instructive return for you. Definitely threw a couple curveballs your way on that one, and threw a couple of curveballs at myself actually trying to prepare that return, on camera. So just on the fly here. We did the best we can on it, and like I said, that's really what we can do in this business is just do the best we can. Not everything's gonna be perfect all the time, and I just want to focus in these videos too on the process, the kind of questions that you ask, the things that you look for, not on getting every single thing to be exactly right, quote unquote right. It's not about being right. It's about developing a process and being able to be right when you have a real client in front of you. When we're practicing like this, it's about getting to the point where we can be right much more often than we're wrong, and we're really prepared to serve those real clients. So hopefully these practice videos, practice tax returns, are making a contribution towards your ability to do that. And thanks as always for checking out our videos and being a part of our learning experience. Have a great day, and go ahead and have a great night too. Take care.